And so with that, hello everyone and welcome. So first of all, we'd love to thank all the audience for joining us today, which I think will be a very exciting conversation about, essentially AI in portfolio management. And before we dive in, just a quick note for all our audience as well. You will see a Q&A button below. So feel free to drop any of your questions there as we go along. We will stop in between the fireside chat, just to answer a few questions that are relevant to the topic at hand that we are currently discussing. Or if not, we'll circle back to the questions that you have in the final section of today's webinar as well. So by way of introduction, I am Audrey. I am the partnership and marketing lead at Going VC. And for those who don't know about Going VC, we're a global platform that helps people break into venture capital through training, community, and resources as well. And alongside education, we do run thought leadership sessions like this to help GPs, LPs, and operators kind of like stay ahead of industry shifts and the curve as well. So today, we are delighted to be co-hosting this session with Standard Metrics, a leading platform that simplifies portfolio management and reporting for venture firms, helping managers streamline data sharing with both LPs and portfolio companies as well. And I'm pleased to introduce our guest, John, who is the founder of Standard Metrics and former VC at Spark Capital. John has been at the right center of the shift. He's been building the tools fund managers rely on and seeing firsthand how AI is transforming the way GPs, LEs, and founders work together as well. So, John, thanks for your time and thanks for being here today. Why don't you kickstart the session by telling us a bit about yourself and about Standard Metrics and also your journey that led to start Standard Metrics as well?
Yeah, for sure. Well, thank you so much for organizing this today. I'm really excited to be chatting with you, talking about a topic that I'm very passionate about. And I'm also really looking forward to some Q&A. So as Audrey mentioned, yeah, please drop some questions and look forward to engaging with those. So yeah, quick background on me. From Boston originally, ended up out in the West Coast for college, fell in love with technology, ended up kind of starting a graduate degree in engineering, dropping out, and becoming a VC, and spent about 6 years at a VC firm called Spark Capital. While I was there, it was an incredibly fruitful and exciting time for the firm. We invested in some amazing companies like Coinbase and Affirm and Slack and Cruise, the self-driving car company, and all sorts of others. One of the things that I noticed while I was there, which was, surprising to me when I first joined as a relatively technical person, was, gosh, we're managing billions of dollars, but it doesn't feel like the industry really has access to great software. And a lot of the software that was getting used was very generic, sort of Microsoft Office style spreadsheets, PowerPoint presentations. And I started digging in and learning more about how the industry developed. And what you ended up having effectively was this cottage industry that, fast forward to today, is like a $3 trillion global asset class. And along the way, not that many people built great software. So one of the problems that I struggled with a lot when I was at Spark was around portfolio reporting. So gathering data from portfolio companies, centralizing it, normalizing it, and then using it to power a bunch of important activities that were going on inside the firm, like portfolio reviews and LP reporting, supporting investment decisions, analyzing new investment opportunities, and trying to understand how those would compare to existing investments. And it was just incredibly manual, incredibly sort of painful process that we had to go through to do this. And so fast forward or rewind back to 2020, I ended up meeting Joe Lonsdale, one of the founders of Palantir and Adapar, and also one of the founders of 8VC. And his firm had also struggled with this problem. And they had tried buying this kind of old school solution that was kind of built for the private equity industry. It didn't work, and they started hacking on their own kind of internal project. I was fascinated by it, so I ended up going and working with them for a few months, and we decided to basically spin out a separate company, which was called Quastra at the time, to go and tackle portfolio management. At the time, one of the big opinionated decisions that we made was, let's build a multi-sided product. Let's build a product that's not just a tool for investors, but also a tool for portfolio companies. And as you get more and more portfolio companies, it'll become more and more useful for investors, and it'll become more useful for portfolio companies because more of their investors will then adopt it, and they can start to report to not just one investor, but two investors or three investors, or maybe all of their investors at some point. And, at the time that felt sort of like a dream. We now today announced that we have 10,000 companies that use standard metrics, which is a kind of a fun milestone. And yeah, really excited to have been scaling this. The thing I'll sort of end with is, you know, the last few years, the big shift that we've seen has been around AI. And there's been a big shift around initially firms starting to deploy capital into AI focused companies, foundation model companies, of course, infrastructure companies, and increasingly lots and lots and lots of application layer AI companies. And then over the last, I'd say really like 6 to 12 months, there have been a big shift in interest around firms realizing we need to adopt AI if we want to be competitive for the future and figure out how to get an edge, streamline operations, and really like modernize our tech stack. And so that's where we're spending, the majority, I'd say, of our R&D resources now is helping firms to adopt AI to solve problems that they have, which I'm, yeah, excited to talk more about today. So it's been a huge trend that we've seen in the industry, both from an investment perspective and from an operations perspective.
Wow, that is great. That's amazing. By the way, congratulations for reaching 10,000 thanks
Thanks.
company on the
Thanks.
platform.
Yeah. Yeah. It's been fun.
That's really helpful context as well. So I guess for today's topic of AI and portfolio management, we'll start by kind of setting the stage in terms of why do you think AI is such a force in portfolio management right now? We did see, a leap in model performance, and we have seen like paradigms like MCP, and also like an explosion of like AI native tools showing what's possible. From your perspective, what is currently driving this shift, and why is this moment different from
Yeah.
other tech bubbles in the past as well?
Yeah. So if I were to try to summarize what's going on right now, I think that if you think about the pre-AI era, or let's call it pre-LLM era, let's say 2020, 2021, when we were getting started and starting to sell our product, um, the biggest challenge that existed at that time was gathering and structuring data like KPIs, financial performance, investment details. Um, and once you had that data structured, getting insights out of that data was relatively easy and cheap, right? The hard part, actually, in many ways, was the collection of the data and the organization and the normalization of that data. But once all the data was in place, it's like, great, okay, we have all the data, we can run whatever kind of analysis we want. Um, However, if you think about unstructured data, so a document that has a bunch of data in it, or a deck that has a lot of charts and graphs and data and text, or an update that has, qualitative, quantitative, those types of unstructured forms of data, at the time was very, very expensive and very difficult to get insights out of. And now we've entered into a world where suddenly, because of LLMs, getting insights from unstructured data is suddenly a lot cheaper and a lot easier than it used to be. And then marrying unstructured data and structured data has become significantly easier too. And so the big shift that's going on now is, you know, gosh, there's a much larger universe of data that we can start to analyze and get insights from than we were in the past. And that's driving people to adopt LLMs, both for data ingestion as well as for analysis and reporting. So that's been a huge kind of unlock, I'd say, for the industry. And it's something that we focus on a lot at our company. I can kind of talk through what we've done there, but we're really focused primarily on providing what we think of as like CFO grade kind of data ingestion. So mistakes will happen sometimes, but like they should happen very, 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 very infrequently. Otherwise, it's a big problem for our customers. Um, and we've built a sort of engine, it's like an AI plus human in the loop engine for ingesting documents that I'm also happy to kind of share more about. But the big technological unlock that's occurred here has really been around the ability to get insights from unstructured data more quickly. And then on the other side, the ability to produce analysis reports in a way that's seamless, in a way that requires relatively little guidance, and that can be quite iterative as well. So it's really exciting. And we're seeing a lot of organic adoption of AI at firms, oftentimes like investment team members experimenting with things. Um, And a lot of that is driving firms to take a harder look and saying, okay, cool. Like we have a bunch of people experimenting with things. Like, what's our strategy here? Like, what are we going to do for the next 5 or 10 years? How are we thinking about institutionalizing this? And that's oftentimes where we can play a significant role.
Yeah, that's a very interesting opening as well. And let's talk about that practical side as well, because you talked about, the adoption of AI at firms where, they are trying out different kind of AI tools to kind of optimize for a firm's workflow, optimize for a firm's operations as well. So when we talk about practical sides, what can AI actually do today for fund managers? We have things like data collection, reporting, and portfolio reviews. Where do you say are the most concrete use cases that you're seeing get real adoption at this point?
Yeah, so there's a bunch of different areas, and some of those areas, by the way, are outside the scope of what we focus on with our product. So, for example, research. Look, research is super interesting. You can ask, ChatGPT deep research to go and like do market maps and relatively sophisticated tasks. And a lot of investors are leaning in heavily to using LLMs for things like market research. Um, and writing investment memos and like a whole series of things that are not what we're currently focused on today. On the portfolio management side, we usually think about data in and sort of analysis reports and insights out. So places where AI is making a big impact already, certainly around data ingestion. So hey, I've got this financial statement from a startup. Great. What I really want is like structured data in my database. How do I go from financial statement to structured data in my database? It turns out that like dumping a financial statement into ChatGPT and asking it to pull structured data into your database naively will get you like reasonably good accuracy, but it's not going to get you close enough to do what you need to do, especially if you're sort of focused on let's call it like data sensitive tasks like finance team tasks, LP reporting, audit support, that kind of stuff. Like you need the transformation of that data to be highly accurate. So I'd say LLMs are good enough to do a okay job getting data from a document into a database, but not good enough yet on their own to do like a 3, 4 nines of accuracy kind of transformation that you would need. But so one of the things that we focused on, for example, is like getting as much juice as we possibly can out of LLMs, amazing prompting, multi-step prompting to drive accuracy rates higher, which we've published a little bit on our blog. And also having humans in the loop in the process so that when documents get transformed, we have human beings reviewing those documents, making sure that the transformation was done accurately. If documents are kind of edge case, like for example, maybe it's an Excel file that has like complex macros in it, and like the LLM is going to get tripped up by that, or there's a fiscal year offset that is going to be confusing for the LLM. We can have humans come in and like correct mistakes and or manually parse certain documents that the LLM is just not going to do accurately enough yet. Over time, that loop closes, right? It's like more than half of the data is now being parsed by AI for our team, which is very exciting, and we expect it'll sort of asymptote very close to 100% over time. So data ingestion is a big one. There's other things too, like, hey, I've got a deck and I'd love a summary of what's going on with this company. That's another thing that LLMs are pretty good at right now. You're not going to get 100% accuracy. You're going to want to go double check everything. But LLMs are good at that. And even things like, hey, here's board deck from mass meeting. Here's board deck from this meeting. Did the company do what they said they were going to do? Like, what are the differences between these presentations? Like, what are the goals that were missed, or what were the goals that were hit? So it's kind of interesting to compare there. On the other side, one of the things we're seeing a lot is, okay, I have all this data and documents like structured. How do I actually use those to go and do interesting things? How do I use those to compare how portfolio companies are performing against each other? How do I ask questions? For example, like an LP comes in and said, hey, please send us this analysis that we want to review. Does it take you a week to turn that around, or can you do that in a day? And that's one of the places where we've seen some of our kind of downstream analysis tools being used, where investor can get a question, they can go figure out the answer to that question, double check it, and then turn it around very rapidly. Versus like, okay, fire drill, like everybody drop what you're working on, and like let's go hunt down all the data that we need for this. So we are seeing a lot of downstream kind of reporting use cases for LLMs, summaries for LPs, answering specific portfolio related questions. A GP comes in and has a question, can kind of immediately self-serve and get a response. So I could talk for a long time about some of the use cases, but I'd say data ingestion and reporting are probably the two places where we see the most interesting portfolio management use cases come up.
Yeah. And on that note, we actually have just a we have a question as well, which I think is also relevant to the current topic at hand. What do
Great.
you think most fund managers underestimate when it comes to cost and challenges of implementing or building AI firm wide? Like when does it make sense to build
Yeah.
in-house versus buy?
Very good question. So if you think about what does an LLM need? LLMs kind of need a few different key things to be successful for the long term.
Mm,
One is that they need context. So if you think about how an LLM works, there's a bunch of context that's provided to the LLM. There's oftentimes like a user prompt that's sent to the LLM, and the large language model uses the user's prompt, and it uses the context that is provided to produce the desired output. That's sort of like a really simple mental model for a typical kind of Q&A style interaction with an LLM. And one of the biggest challenges that exists is around context management. So how do you make sure the LLM has the information that it needs? And that when that information changes, the LLM has the updated information. And when new information is added, the LLM has access to that new information. When the permissions around that context change, potentially, that the LLM is kind of constrained by those permissions. So those are things where, rolling your own workflow, for example, in ChatGPT. And by the way, I do this all the time personally for various tasks that I have. It can work really well once, but having that work well like 100 times across 10 different users can definitely be pretty challenging. Um, and so I don't know. I think for me, like experimenting, it's like always great to experiment on your own and try things out. Um, do you want to rely on an experiment for, a long-term internal initiative? Probably not. So I say like try experimenting and see how far you can get. And then when you start to feel like there's real pain that you could potentially solve, but you're realizing that it's not going to work for the long term, that's when it's like a great idea to go look at, external providers that can do the context management and permissions management and things like that are really, really critical for users to get right. The other side of it is workflows. So, you know, uh, ChatGPT is an amazing product, and I use it every day. It is a little bit though like you kind of have like a blank a little bit. It's a bit of a blank canvas kind of product. You can ask any question you want, um, but having so many different choices can sometimes be like a little bit paralyzing. And so we do think that there's a really exciting opportunity to build more narrowly defined workflows that we know are going to solve common problems that users have, even just in the context of like suggested prompts that we know that users are likely to have. So for example, we've built an AI portfolio analyst product that sits with each portfolio company. It's think of it as like a dedicated AI analyst that can answer questions and produce reports around every company. Soon we're launching a portfolio wide AI analyst. And one of the things that we're going to launch in the future is basically like suggested prompts that change as you navigate around the site. So if you're on a
mm,
specific portfolio company's page, it's going to suggest prompts relevant to that portfolio company. If you're looking at the portfolio dashboard, it's probably going to, suggest prompts that are relevant to a broader swath. If you're in the, information request section of our page, maybe it prompts that are relevant to the data collection process, and so on and so forth. So I think that yeah, the workflow management side of it, and making sure that users have the ability to get the job done that they need done, and making that faster and easier, I think is another place where dedicated platforms like ours are just going to end up providing more value and getting more engagement and more usage over time. But
yeah.
this is one of the fundamental questions that comes up a lot, is like build versus buy. I do think that people underestimate the cost of building dramatically, and we've seen this over and over again with our customer base. I wrote about this like a couple of months ago, but we had a customer that in the early days that actually churned. And we're like, we're building our own solution. And we're like, okay. And then they came back to us a couple years later and they're like, all right, we're ready to get back on board.
Yeah.
Because it is very, very expensive and difficult. Even with amazing tools like Lovable and Bolt and V0 and all these tools that we know and love and I use personally. Building something that's going to stand the test of time for an institutional fund is it's a lot and it ends up being a big cost and it takes a lot of time and attention and focus away from making new investments and supporting portfolio companies and raising money from LPs and all of the critical things that need to get done day to day.
Yeah, exactly. I mean, like as a founder yourself, I mean, we're both in a way founders as well, so you will understand the amount of like different kind of task and things that are on your mind every day. The moment you wake up, you're not just building a product, you're not just building the operational workflow. You not have to think about it, but you also have to think of sales, fundraising. You need to think of managing your employees, thinking about scaling, thinking about expanding, fundraising, and also communicating with your LPs as a fund manager as well. So it's like as a founder of a business, generally like, it is definitely much more thoughts to think about than just like building out an operational workflow, especially when you're starting out with a small team. And when you talked about one of the use cases being reporting as well, right? And I think in that sense, one of the biggest themes that we hear today, and we hear from GPs, is about LP expectations. I would say like for fund managers, LPs today want, faster, deeper data, and firms also risk looking bad if they can't deliver that, that reporting. So in that sense, how is AI changing reporting, transparency, and ultimately the GP LP dynamics going forward into the future as well?
Yeah. Yeah, it's interesting. There are like several different things that are at play here. Obviously, there's a shift in technology, but there's also shifts in expectations.
Mm,
And I mean, I remember when we started the business in 2020, very clearly talking with the CFO at a larger firm, and the CFO telling me like we're never gonna buy software like this. Like our LPs aren't asking us for detailed data, and we've delivered great returns to them over the years, and like this is just not the kind of thing that a firm like ours needs to do. I remember it was a very discouraging conversation at the time, but it's like you plow forward. And then earlier this year, we signed them as a significant customer because a lot
Relations.
changes in 5 years. The technological capabilities increase, but also um, LP expectations have dramatically changed. There's been some regulatory changes that have occurred. There's also, as the LP universe gets more and more broad, there's more and more LPs from different countries that might have different reporting expectations, especially from Europe, actually. And yeah, I think we're in a world now where, you know, LPs feel more comfortable reaching out and asking for bespoke data requests. Especially for a large LP. If your largest LP reaches out, like you're probably going to want to respond and send them something that's impressive and thoughtful. And that's a place where AI can have a huge, huge benefit in speeding things up. Um,
Yeah.
Again, definitely for critical things like that, double checking all the work is always important in my mind, very important. But um, question like, hey, what are my, what are your 10 fastest growing portfolio companies that have over $20 million in revenue? Um, that should be a question that an LLM answers that a human double checks. And
Right.
that could be done in, you know, the on the order of minutes, if you have all the data organized well, versus on the order of hours or days if the data is not organized well. So I do kind of come back to this. I do think that organizing data well is still an absolutely critical aspect of it.
Yeah.
Um, but yeah, so I think that like being able to be highly responsive to LPs is greatly aided by LLMs, and then being able to produce compelling reports that combine qualitative and quantitative. That's also
Mhm.
something that's aided dramatically by LLMs, and obviously, again, should be double checked by humans. Previously, doing those two things well was almost two separate activities, but now it's more and more turning into one.
Yeah, no, I think definitely, of course, AI at the end of the day, like, LLMs and AI, they earn full proof. I mean, in that sense, like, where does it still fall short to you? Like, is it accuracy, determinism, context overload? Like, these are also some of the issues that, common users we still experience on the day-to-day, even with just ChatGPT, right? The overall consumer. So how do you think fund managers on that sense should approach these limitations, and what's the right balance between automation and human judgment as well?
Yeah. That's a really, really good question and a really tough question. And I think it's important for investors to understand how fault tolerant a given activity is and map their sort of approach given those risks. So for example, you know, the largest pension fund that's invested in your latest fund reaches out with a mission critical, important, urgent question. Love the idea of using LLMs to speed up that process. Definitely strongly suggest that a human goes and like hand checks all of the data to make sure that everything is done correctly. Um, on the flip side, two people are batting around ideas in the office, and one of them says, "Hey, like I wonder if our, Israeli companies are growing faster than our European companies." That might be a question that you can ask an AI portfolio analyst, and you get a response, and it's probably directionally correct. Maybe there's some underlying errors, but like if there's one or two mistakes, the overall theme is probably the same. And going and hand checking every single data point might not be as mission critical because it's more for just like an internal discussion. So there is a range of kind of fault tolerance where we are really focused, especially when we're focused on extracting data out of documents and putting it into a firm's kind of database per se. That's where we slow down and we heavily leverage AI, but we make sure that the accuracy rates are going to be what our customers need. Again, because of how critical it is for that data to be accurate for all these downstream, valuation, audit, LP reporting use cases.
Yeah.
Yeah, it's interesting. I think there are certain companies that are kind of like, at least the pitch is sort of like, YOLO, like toss all your documents in, we'll get you the data out, it's going to be great. When we've
Yeah.
talked to customers that have used some of those solutions, oftentimes what they say is it was pretty good, but there were a significant number of mistakes, and like we can't afford to have a significant number of mistakes. But that'll change over time too, like the ball is obviously, moving in that direction. Um, and that's the thing that's so exciting is just that the technology is getting better and better over time, and we can really feel that with our business.
Yeah, definitely. I mean, like in the current years to come, there will definitely be an exponential curve in the way technology builds itself. Given the current LLMs and the AIs that exist today. I think with that sense of like the right balance between automation and human judgment, you did talk about how data ingestion and reporting are the most common use cases for using AI. And I'm gonna flip the script here and ask like what type of processes do you think are the most difficult to automate?
Interesting. Um, I'd say it probably comes back a little bit to some of the discussion we were having earlier around like context management and sort of like workflow management. The narrower the type of data that you're looking to use, the easier it is to sort of like automate a process. And when there's more and more and more and more and more and more different types of data that you need to leverage, it gets trickier and clunkier, and you start running into more issues where like systems don't kind of communicate effectively with each other, which is something that we're working on solving and would love to kind of continue solving more in the future by building more and better native integrations with other providers in the space. An example would be like, you know, does your CRM talk well to your portfolio management tool? And if the answer is no, then any sort of workflow that kind of broadly reaches across those will start to run into some more significant challenges. Um, so yeah, so I'd say like as a general rule, the more unstructured the data, the more complex the data, the more different types of data that there are, the harder it is to have like really accurate, awesome automations that sit across all of that. So we do think that that is going to put a lot of pressure on the industry to be more interoperable, fewer walled gardens, more open APIs, more direct integrations, and probably more standards around how people label things and discuss things. It's something that we're working on a little bit around metrics and trying to make sure that the way that metrics are defined is very standardized across different firms. It's not going to be the same for everybody, but we publish benchmarking reports, and we're kind of trying to push for a higher degree of standardization in the industry just to facilitate, some of this downstream analysis that we think is really important and should be done more. Anyway, I could talk more about this, but that's one kind of class of problems that tend to be a little bit trickier. And then I mentioned before also the other class of problems are like highly unstructured, irregular documents are tougher to very accurately pull data out of. And over time, as LLMs get better and better, that will become less and less of a problem.
What are some examples of that, like the highly irregular
Yeah,
unstructured?
so like I kind of so I'll give you an example. So imagine like um imagine a PDF file financial statement for a company that reports in a foreign currency with like an offset fiscal year end. So instead of having like a December 31st fiscal year end, it has like a February 15th fiscal year end. So it's like, okay, that's, highly irregular. LLM's probably going to get confused by some of those things. Um, and maybe instead of having, January, February, March, April, May, kind of like neatly laid out in different columns. It has like January, February, March, Q1, Q1 budget, Q1 delta, April, May, like just a format that like looks a little bit different from the way that most statements are formatted. And imagine that the way that the PDF was saved down was it actually kind of like was too big to fit on one sheet, so it like spread across like multiple sheets, and so like there's just like a lot of like formatting related challenges that exist in this hypothetical document that I'm sharing with you. You feed that into an LLM and you ask it to cleanly pull out the data, there's a very good chance it's going to miss things, miscategorize things, and run into trouble. Whereas a human analyst is going to be like, okay, this is a weird looking document. I'm going to like, put on my glasses and sharpen my pencil and like really make sure that I'm getting every single detail right. So that's one example that I would share. Another example might be like, strangely labeled charts in a document,
Yeah.
where it might not be intuitive to the LLM exactly what something's being referred to. Like maybe it says like 1369, and for a human being, you'd be like, okay, that's referring to like millions of dollars of ARR, but an LLM might not understand that, and might kind of mislabel that. So there are like a ton of different edge cases that one can run into that erode the accuracy of pulling data out of unstructured documents, or like some semi-structured documents like the PDF file I mentioned before. And that doesn't mean that LLMs won't eventually be able to parse those with like effectively 100% accuracy, but certainly, the cutting edge that exists today, to be able to handle those edge cases well does require a sophisticated prompting process, and also humans in the loop for QA and error correction.
Yeah, well, that makes sense. I think we also have we actually had a question from one of our audiences, Humphrey, which I think relates very well to the workflows that you were talking about. And his question is, our firm already uses Carta and Affinity, but we're not fully leveraging all their features, and there's overlap in how we manage portfolio data. In an industry like VC, where workflows move quickly and evaluations don't always follow a standard pattern, how do you recommend designing the right workflow and deciding what to automate versus keep flexible?
Yeah, that's a great question. We could probably spend the last, 20 minutes just talking through that one. Um, yeah, so I'd say, first off, we have a really close working relationship with Affinity. We love Affinity. We actually have a number of kind of Affinity alums on our team, and share a lead investor with Affinity in 8VC. And we have customers that have leveraged our open API to build integrations with Affinity. And we plan on building deeper direct integrations in the future with them as well, hopefully. So yeah, this is a common question that comes up. It's like, hey, maybe we use Carta for fund admin, or maybe we use Carta for managing, cap tables for some of our portfolio companies. And there's some data there, and there's some data in Affinity, and there's some data in Airtable, and there's some data in documents that are saved in Google Drive. You know, Making the decision to try to centralize a lot of that core data in one place, it's a big deal. Sometimes we discuss internally that, while we are selling software and managed data services, we are also in many times selling like a change management process where some of the firm needs to decide, hey, now's the right time for me to make a long-term commitment to having a core system of record for my data. I think the important thing to think about is like what data should live together and what data does not need to live together. Back to the previous comment that I made around multiple different data sources and complexity around that. For example, like CRM data for me is like very distinct from portfolio data. And there's some degree of overlap there because a company starts in your CRM, but once you make the investment, it's still in your CRM but it's also maybe in your portfolio management system. And that's where I think that like direct integrations can be really powerful. Affinity has all these amazing insights that we don't offer, nor do we plan to offer around like, when did you last email them? And, it could even be like, what was the context of that last email? When did you last meet with them? They also have really incredible integrations with like PitchBook and other providers to pull sort of some external data in. That's not like an area that we're planning on replicating. So to try to be like concise in my answer, um, flexibility comes at a price. And I think that there are some firms that are sort of curious to see how things are going to play out in this space before deciding, what horse they want to the bet on. That's something
Mhm.
that we encounter frequently. I think firms are very eager to figure out who their kind of core operational software partner is going to be and who their core kind of AI partner is going to be. And I think it's up to companies like ours to make a pitch that's super compelling around the immediate value that firms can gain, that tips firms into saying, you know, should I wait? Should I wait and see what's going to go on? To like, no, like that right there is going to help me a lot right now and change my workflow for the better and save us time and give us more insights. And I want to make a bet that that company is going to be the right company to build with. But going back to the beginning of the conversation, because there's so many different ways of experimenting on your own, a lot of firms are sort of playing around and figuring out what workflows would be valuable before going and selecting a technology provider. And that's one reason why I love talking with investors who are in that experimentation phase, because we actually learn a lot from that. And we take that back to our product team and we say, hey, we talked with like 3 investors over the last, couple of weeks that are, going through this board prep workflow using AI, like and starting to gain inspiration from some of the organic things that we're seeing people jump into with various off-the-shelf tools. So I hope that answers your question. Uh, Probably like a much longer discussion to kind of go through the nuances of your firm. But yeah, I think that for me, organization of data is critical. If you don't have your data organized, I would find a way of getting your data organized, whether it's with us or some other, type of tool. And then figuring out when you want to make that bet around really embracing kind of an overhaul of reporting and analytics, and finding the provider that's going to speak to your needs. And as far as the timing for that, that's where the nuance comes in.
Well, that's a very meticulous answer, and thanks for that. As well as like, on that note, let's sell standard metrics a little bit. I think we had a Q&A come in where they said how many VCs use standard metrics currently, like the platform, and who are some of the top VC customers using the platform as well.
Yeah, so we support over 130 different firms. Most of them are VCs. We do have some private equity and credit firms as well, which we're really excited about. You wouldn't really know that from going to our website because our website's kind of like VC, 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 but we've had some awesome kind of PE firms approach us over the years, and we're really, really proud to support them and plan on doing more of that in the future too. So yeah, about 130 that are paying customers, and we have, thousands of investors that have used our product as free users, that portfolio companies have invited them to view an investor update or something like that. As far as who uses it, some of the firms that I would highlight that we're really proud to work with would be like Excel Partners and Bessemer Venture Partners, General Catalyst. Those are larger kind of, multi-stage institutional firms that, yeah, we're just really, really honored to get to support. We do support though a very broad range of different size firms. Like, one example in London is a firm called SOCE Capital, that is mainly kind of seed and Series A focused, a couple $100 million in assets under management. And so, we will kind of span the gamut. We just signed a customer last month that has made 4 investments and has, I think, a fund one that's like 30 or $50 million. So, you know, some scale, but very early, kind of in their journey, as and really wanting to make a deep investment and having the right kind of reporting and analytics infrastructure from day one. So we do like to work with a broad range of different firms, and we've seen some of these smaller firms grow, 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 grow over the years, and they started out as a small customer, and they end up sort of turning into a medium-sized or large customer, and that's just like an incredibly gratifying thing to see. We really feel yeah, it's really sweet to see customers thriving and growing and all of that. So yeah, those are some of the customers that I would call out. We have others that we've listed on our website, and many amazing customers that we're not at liberty to disclose publicly as well. But yeah, it's been a fun journey, and we feel really honored that so many great firms have decided to come and build on top of our platform.
Oh, that's amazing. And on that note of customers, we just had a question come in by one of your customers as well.
Oh,
Uh,
great.
a question by Mark Roberts. So he says, my firm, which is part of your customers, is starting to onboard with Notion. Any advice you have regarding leveraging standard metrics and Notion together?
Nice. Well, thank you for joining, and happy to have you here. Yeah, so this is a question that we get a lot because Notion, and we use Notion. Notion is like the central nervous system for our company. So I'm not surprised to hear that you're using Notion. We also have a lot of our other customers that use Notion very heavily, oftentimes for research, investment memos, internal notes, things that are like pretty important for the firm and as far as tracking. I'd say oftentimes more qualitative, but back to this notion of like unstructured, semi-structured documents that contain some quantitative and structured financial information or other KPIs, but also a lot of commentary. How's the team doing? How's the product doing? So very common kind of combination of using standard metrics and Notion. We do not currently have a integration with Notion, but we do plan to integrate in the future. I think the one of the things that Notion's leaned into a lot is MCP. And so it's possible to build tools that leverage Notion's MCP internally. We've done some demos, like I think we've done like a couple of videos on LinkedIn about like a standard metrics plus Notion, like hook up to standard metrics, hook up to Notion, and be able to leverage both together. We're still in the very early days there, but we're really excited about the ability to use standard metrics alongside other tools. One of the questions that I have is, you know, what's the right place to do that? Is the right place to do that externally from a tool like Claude, or is the right place to do that internally in a tool like Standard Metrics, but from Standard Metrics, building that integration into Notion, whether it's a direct integration or leveraging Notion's MCP from within Standard Metrics? So we're still sorting that out a little bit, but we're really excited about the possibilities there. Like one of the examples that we had, I think, was like scan my calendar for upcoming board meetings and then pull data from standard metrics and Notion and basically build like quick reports for each one to help me get prepped for each board meeting. Those are the kinds of things that, would have been very time consuming to do previously, and you can start to do much, much, much faster now. So we're really psyched about that, and we're planning on leaning in more into integration with these sort of note-taking areas. Another one that we don't currently work with, but would love to in the future is Granola, that a lot of VCs are using for note-taking, that we see come up kind of again and again. Also UK based, I think, if I'm not mistaken.
Yeah,
Um,
yeah.
so yeah,
Made in.
thanks for the question. We're sort of like working on building out more capabilities here, and we think that that's going to be a very powerful combination in the near future.
Yeah, shout out to Granola as well. Like I personally love using it as a personal user. It's amazing. We have two more questions as well from the audience. The first one is,
Great.
do you have any customer funds that have SSBCI capital deployed and use your platform for SSBCI reporting to Treasury Department?
That is a great question. I do not know the answer to that question off the top of my head. If you want to shoot me an email, and I'm just John at standardmetrics.io, I'd be happy to look into that with the team. So I would need to double check before getting you an accurate answer there.
Okay. For any further questions, for a follow-up email, I will be sending a follow-up email after this webinar, the recording included, and as well as just some follow-up. I will include John's email in the follow-up email as well. Yeah. And yeah, so there's another attendee who asked, the VC tech stack continues to grow, where companies developing solutions for this vertical are one or two roadmap update ahead of its competitor, but change is so frequent. How do you see funds handling this with internal teams and avoid burnout from evolving and growing number of tools?
Yep. Yeah, it's a great question. It kind of ties in a little bit with the earlier question around like what's the right time to make that, to make that change, like staying flexible versus kind of going all in on a platform? That's a really tough question. And I think it actually is a tough question, not just for our industry, but just broadly speaking. Um, the software landscape is rapidly changing. Like a net new company that starts today versus 5 years ago, like we did, makes pretty different choices around its software providers, across the board. You look at, we were started in 2020, and in 2020 was when, for example, Linear was just starting to get really popular as a tool for managing like engineering team, task management, project management, and we adopted Linear as our first engineering productivity tool. But if we had started the company 3 years earlier, we probably would have used Jira or a different generation. Now you go talk to like new startups, like so many are going to be using Linear, and I think with a lot of these AI native tools, across the board, sales, customer support, success, prospecting, marketing, like there's a whole new wave of companies that are coming. Inventure is the same thing, like before we existed, there were a couple of other tools in our space, but it was a pretty like limited landscape. Now, if you fast forward 5 years, there are more tools. Some of those companies that were, working at the time no longer exist. Some of them have been acquired, but then there's been this new batch of companies that have started over the last 5 years, and so it's a very dynamic space, which as a founder is fun. And when we see competition of various types, in general, it just kind of gets us fired up because we're a very competitive group, and we also get inspired and and pushed by new folks entering the space. Not getting burned out, I think, is really important. I think it's really important to choose a technology provider that you feel really aligned with philosophically, and so I think that's actually one of the most important decisions that you can make, because the feature set that exists today is important, and it's important that that feature set is going to like solve your problems that you have right now. Um, but that feature set will rapidly evolve over the next few years. So, to some extent, yeah, choosing a product that's going to make a big impact, like, on your firm today is mission critical and it's a non-negotiable. But also choosing a company that you feel like is going in the direction that you and your firm are interested in is important. So I think that that's something that I would focus on. Is like what's the philosophy? What are the values of the company? And to the extent that it's possible, like how do you think about what that's going to look like? One thing that I would focus on a lot as you're considering that is interoperability. So there are some providers, without kind of getting into, naming names, that are like very vertically integrated, kind of walled garden, our way or the highway kind of providers. And there are others that tend to be a little bit more focused on interoperability. In a world where things are changing very, 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 very slowly, working with like a walled garden, vertically integrated type provider has a lot of benefits because um, you can sort of get many different things all in one. In a world where things are changing very rapidly and there's a lot of innovation going on, choosing a walled garden provider is actually kind of tough because you know that there's going to be someone else out there that's building a 10x better experience that you're not going to be able to work with because you're kind of stuck in this ecosystem. So my perspective on this, I'm obviously a little bit biased, is choosing providers that are very open to building integrations, that have an open API, that are focused on, hey, like this is your data, like if you want to pull your data out of the system, if you want to pull your data into another software provider, if you want to pull your data into Excel, if you want to leverage that data externally, it's your data and you should be able to do that. That's a philosophical decision that we made that we have very deep conviction is the right one for this space. But it's not right for everybody. So I do think like thinking about the philosophy behind your provider and where they're going and how they think about data ownership, and do they want to be everything to everyone, or do they want to try to be like the best in the world at a certain class of problems? Those are some of the things that I'd be thinking about.
That's a very extensive answer right there. I think we are close to time, but I would love to speak about. I would like to speak out one more question from the audience, pick out one more question from the audience, and then ask you a closing question
Sure.
as well. So one from the audience is, if you look a few years out, what does an AI native portfolio review meeting look like compared to today's? Very relevant for relevant to your previous answer as well. And how is that
Great
metric
question.
designing for that shift?
Yeah, that's such a great question. That question makes me very happy, and I wish I had more than a few minutes to talk about that. So, I think that the inputs to that portfolio review meeting, which are like quantitative inputs, financials, KPIs, budget versus plan, as well as the qualitative inputs, which might live in a place like Notion, or in standard metrics, or maybe emails that are ingested by the system. All of that is sort of like automatically and seamlessly pulled in and organized and summarized, with the ability for human beings to go in and change things. So right now, for example, when firms collect data on standard metrics, they can automatically create tear sheets for every company. And so you go collect data from 50 companies, you can get 50 different tear sheets, all the data is pulled in. Um, the additional layer on top of that would be, qualitative information, summarization, identification of key risks and milestones, et cetera. And then, a person could come in and say, you know what, I actually sort of disagree with this, or I want to add my own commentary here. I want to change this around. So the setup of the portfolio review meeting would be like highly automated as far as like ingestion and summarization. As far as the meeting itself, that's where we start getting into the next layer in of like analytics and predictive analytics, benchmarking, which is something that we spend a lot of time working on, and I'm really proud of the product we've built there too. You know, right now, oftentimes a portfolio review meeting feels a little bit like, all right, now we're talking about portfolio company number one. How are they doing? Oh, they're doing great. They're like, beating their plan. We think that those meetings should be much more, the qualitative aspects matter a lot, especially for early stage companies, but there should also be a high degree of kind of data overlay that exists. Hey, here's all 50 of our companies. Here are the 12 companies that are like truly outperforming their plans. Here are the 8 companies that are in the top decile of growth for their relative categories. Here are the companies that are in the bottom, quartile, and here's what's going on with them. And here are the key risks that we've identified. Starting to think about the portfolio a as an opportunity to go and explore and optimize versus each company being its own little window. I think that there needs to be a little bit more of a balance. And so when we're thinking about, our future product plans, we're still very much in this phase of like collection, organization, summarization, making sure that everything is clean and perfect for the user. But we're starting to get more into now is these portfolio wide workflows, and I think that that will play a bigger and bigger and bigger role in the future. Hey, your fund has $30 million of reserves. There's 30 companies that the fund is invested in. Here are the 5 that are like dramatically outperforming their benchmarks. Like, let's start with those 5 and talk about those 5 and like what's going on with them. And, so you start thinking a little bit more around impacting the investment decisions that are getting made around reserves and follow-on investments. That's where I think we can start to add more and more value to firms, where it's not just a tool to like automate operations and have better data and respond to LPs more quickly and improve downstream reporting workflows, but also like how do you invest the remaining capital in your fund more effectively, with the existing portfolio companies, and how do you jump in and help companies that are struggling? It could be that could do great, but they need a lot more help in identifying that more proactively. So I think that that's probably where there's the most room for product innovation right now, and where we'll spend a lot of time over the coming years. And I'm really excited for what that future portfolio review process looks like.
Oh, yeah, you summed it up perfectly. Actually, the closing remark was kind of was the closing question was actually, what should fund managers be doing right now to prepare? But you kind of answered it into the audience's question as well. So I think, with that said, I'll leave that as the last as a last thought, and I'll leave that as the last question. And I think because we are also close to time, we'd like to, we'll love to wrap up the webinar as well. So,
Thanks
first
for
of
having
all,
me.
yeah, thanks for sharing such great insights today. And also a few takeaways, essentially AI is already streamlining data ingestion, reporting, as you mentioned. So what used to take weeks are now taking minutes, and there's this rise of LP expectations, transparency, data, and sense like, firms can't risk providing fast, accurate data, leaving risk falling behind as well. And yeah, so with those, I will send a recording, a webinar recording to everyone who came today, and I'll send it on the follow-up email. For those who have further questions, who didn't manage to get it answered, or would love to ask it privately, I will drop John's email in the follow-up email following today's event. And yeah, once again, thank you again to John.
Thanks for having me on. It was really, really fun talking with you, Audrey. Appreciate it.
It was fun talking to you. It was really great. It was great hearing your insights as well. And thank you for Metrics to for co-hosting with us.
Awesome. Our pleasure. Thanks a lot. Take care.
Nice seeing you.
Thanks,
Bye bye.
everyone.